Hello traders, and welcome to today's video where we are going to be doing a deep dive into the depth of market, or DOM, on Exocharts Desktop Pro. Now this video is going to be split into three main sections. Okay, part one is going to be just explaining for anyone who may have never seen a DOM before, or a depth of market. By the way, this is it on the left hand side of your screen that you are seeing just here. So these blue rows, red rows, columns with all these numbers on it and these constantly moving numbers, that is your DOM, that is your depth of market. It's a very different view to what you may be used to, but we're going to be explaining what this is, the mechanics behind it and the theory behind it, which will give you a really good base understanding of what exactly it is you're looking at here. So that is going to be part one of the video. In part two, we're going to be taking a look at how you can get this set up on Exocharts itself. So we're using Exocharts Desktop Pro as always here, and we're going to be showing you how you can get your DOM to look a little bit like this. We're going to be going through the various customization options that you have available, and as with all of these videos, okay, we are making this template available. So if you do go over to toroscrypto.com, which you will see over here, and if you do navigate your way down, you'll start at the top of the page here. You can click on the little Discord guy over here, or you can scroll down and click on free Discord community. We are making these templates available. So the DOM template that you did see on the previous screen, if you do connect, go onto our Discord and navigate your way to the trading help section, there is a template available for the public for you to use that looks basically exactly like you see in front of you here. Okay, so that's going to be part two, how you can set this up, the different settings that are available. And then in part three, we're going to be looking at basically why the DOM is important. Okay, so we're going to be explaining why it is useful and how you can use the DOM as part of your kind of standard trading setup, and how the DOM, or by using the DOM, it can help to give you an edge over the rest of the market in order to make better decisions on the market, and in turn be able to make better trades. Okay, so please do, as always, hit that like button, and if you've not seen any of our videos before, please do subscribe. It really means a lot. And yeah, we'll get straight into the video. Okay, so going back over here onto this left hand side, and you can see all these rows and columns all representing a lot of data. This here is your depth of market, your DOM, your order book depth. It all means the same thing. And there's a lot of information on here that goes beyond what you would normally expect to see from a standard order book. So what we're going to do just for now is we're going to focus on these middle columns here. Okay, so you can see this dark shaded blue, this kind of darker section in the middle, and the darker shade of red here on the right hand side. And we're just going to focus on those initially, and then we'll expand it out and go into what these other columns mean, the stack, the price and size that you see over here, and this profile that is on the left. But we're going to focus on the bids, the sells, the buys, and the asks first of all. Okay, so welcome to my little demonstration here. Now what you see in front of you is the same as what we had on that previous screen. Okay, you can see the dark blue, that middle section, the dark red, and what you have there is your bids, your sells, your buys, your asks, and we've also added the price here on this right hand side. Now imagine for a moment that Toros Crypto are releasing a new set of merchandise out to the public, and we are creating an auction, we're creating a marketplace. Now we've already distributed some of our product out to these people that you see in front of you just here. These are looking to sell the product. And we've also let a few people know that some people who want to buy the product, they are sat here. We've asked them to submit their bids, but these people, they cannot initiate a sale on their own. Okay, so you have your asks, your sellers, who are sat there in their little stalls waiting for people to come and buy that t-shirt, that product off of them. And then you have your buyers over here that are just, again, sat in a line. They're saying, I would like to buy a t-shirt for this price. For example, here you have a couple of people here looking to buy a t-shirt at $10 whatever dollars, but they on their own cannot initiate a sale because, I mean, the closest seller that you've got is at 11. So what we need to do is we need to open the doors to the general public, and this is where the aggressive participants come in, the market, like the people who actually move the market. These guys can initiate a sale. Okay, so these are what you're looking at here are the kind of the passive participants. They're there, they know they want to buy, they know they want to sell, but they've got to wait for these people to come in and actually go, take my money or take my product, and that's when the sale gets initiated. Hopefully that made sense. So what happens, the first guy comes trotting along and he's like, right, okay, cool, I just want to buy this. I just really want to get my hands on this brand new Taurus t-shirt. I'm going to pay the asking price. The cheapest asking price for this is $11. So this guy comes along. There he is. It's a little star. He's a little star. He's bought this t-shirt. He buys this t-shirt over here for $11. And then, of course, the seller who was sat there originally, has now disappeared from the market. So what happens? That sets a price. So the price of this is now $11. Okay. So the price for any instrument is always going to be its last traded price. But what you create there is a little bit of an imbalance. You get a little bit of a gap because you can see there's no one left on the ask side for $11. So what happens then? Okay, you know that there's a couple of people that are looking to buy down here at 10, and you know that there's a few people looking to sell here at 12, but that gives you a bit of a spread. You've got an imbalance there. You've only had one buyer that has come into the market and has bought at $11. So now the market has a decision to make. Okay, you've seen that a product has just sold at $11, but there's no one left at that price to make a transaction. So you either need to wait for either a buyer to step in and to buy one of these products that is coming from the ask side, or you need to wait for a seller to step in at a lower price that's happy to pay a lower price and to take one of these bids here on the left. However, the other option is that the passive participants can notice the price has moved up. Okay, so they've noticed the change in price and they can adjust their bid or their ask to reflect that movement in price action. So what we have here, we're going to focus on this guy that is down here, who was initially wanting to buy the t-shirt at $9, but he's just seen that there was a sale at 11. So they're thinking, right, okay, someone's just bought this at $11. I really do want to get my hands on one of these t-shirts straight away, and I just want to go home and just make that sale and be done with it. Okay, so what they have decided to do is to remove themselves from this $9 region and place themselves nicely back at 11. So they have now placed their bid at $11, knowing that someone has already bought there. So let's hope that a seller does step in and is happy to say, right, okay, someone's bought at this price, I'm happy to sell at that price. I don't really want this t-shirt, this other muppet can have it. And then what happens? They come along, there they are. I would call them a little star, but they're technically, I mean, they're selling the t-shirt, so maybe they're not. But they are there and they have sold to this buyer. They have sold into the bid. And what happens then is this guy disappears as that market order has taken place. Okay, so this seller comes in just like, cool, all right, you can have it for $11. They sell it into the bid. Okay, in the same way as this buyer was buying into the asks, and then what you are left with once again is that this $11 region is clear. Okay, so then what happens next is a few other people come along. They realize that there is no one left here to sell the t-shirt at $11. Someone steps in and they're like, you know, I'm just going to pay 12. I want to get this t-shirt. I really want it. So they come along, pay that $12, and once again they have bought into the ask, so that removes another participant from the ask side from the market. So whereas you did have 3 sellers there before, you now only have 2, because this person has come along and bought the product or if it's a contract, they have gone long at that point, and this person who was in the seller has taken that short position. Okay, so they've got the t-shirt, they're very happy, and suddenly there's a bit of excitement going on. You get two other people that come in, that removes these sellers as well from the market, and we're now left with a bit of an imbalance here. Okay, you can see there's a lot of buyers stepping in here, buying into the ask side, and that's created a spread where you don't have any bids down until $10, and you've not got any asks up until $13. So you've got this big kind of void of liquidity within the market. You've got this big gap between the people that are wanting to sell these t-shirts, the people that are wanting to buy them, and someone else has to step in. So once again, you either need to have new participants that are willing to place their bids or their asks within this region here, with price now being at $12, or if someone again comes along, really wants to just sell their t-shirt, they know that there's a few that have just bought for $12, but they just really want to get rid of it. They hate it. They hate Taurus, they hate the t-shirt, they don't want it anymore. So they come along and they step in and they're like, you know what, I'm not even going to wait for this these asks or bids to kind of balance things back up. I'm just going to get rid of it. So they then make a market sell at $10, which then removes this person here from the market. Okay, so fast forward on a little bit here, and you start to find that the asks, the sellers, and the bids, the buyers, start to repopulate the books. Okay, you can see that there has been balance restored into the market. Price sat here as the last traded price at $10, but now that spread between the bid and the ask has reduced, as you have had some new people to the auction that are willing to sell and buy at different price to what they were previously, or they've just come into the market and they have placed their bids and their asks to reduce that spread. So then again, another market participant comes along, okay, and suddenly, okay, this person wants to sell 3 of these t-shirts at market. Now this creates a problem, okay, because as you can see here, there are only 2 people on the bid side. So what does this person then have to do? They wanted to sell 3. They have just sold. They've been like, I'm just selling these 3 t-shirts at market, thus removing these 2 participants here from the market. Now we have a bit of a problem because this guy came along, wanted to sell 3, but has only been able to sell 2 at $10. There are no more bids there. There are no more buyers there. So what has to happen is this 3rd t-shirt then gets removed from this price. It can't sell at that price, so it is forced to sell at a lower price, on this occasion $9, therefore removing this participant from the market and creating slippage. So this is what happens when the order books are too thin within the market, that if a big order comes through, for example on this occasion 3 t-shirts being sold at market, that participant was only able to sell 2 of them at $10 because there were only 2 people there with the bids, and was then forced to sell the 3rd at $9 because that is the closest price in which they were able to get through and to sell to a bidder there. So that is how slippage is created, when the order books are not able to absorb these large market orders and price can move through multiple levels with just one market buy or one market sell. Okay, so now with the price of these t-shirts trading at $9, the market starts to repopulate itself. Okay, so we had that last sell that came in from the guy that traded those 3 t-shirts. I've just removed all of the sells and the buys from the chart now just to clean things up a little bit. But it starts to repopulate. Okay, you can see some bids coming in at $8. You can see an ask coming in there at 12. You can see a few more bids coming in there at 9 and again at 8. And the buyers are here. They are wanting to basically buy these t-shirts nice and cheap at this point, but the sellers aren't willing to budge. Okay, you can see that seller popping up there at $12. None of these sellers are willing to come down in price, and they can see, okay, so the sellers can see at this point that there's a lot of people that are wanting to buy this, but they're just being like, you know what, I'm going to stay here. I'm confident there's a lot of people that want to buy this product. That guy that came along and sold 3 earlier, that's pretty much the supply gone on the market, and now we're looking for, there's pretty strong demand, there's a lot of buyers coming in here, so there's an opportunity. And the buyers will either be faced with a choice of, they've either got to buy now at $11, or they've got to wait for someone to come in and sell to them at 9. But again, some of these people might want to go home, or some of them may sense an opportunity here. Some of them may actually want price higher. And this is again where kind of the market maker theory comes in, is that some of these bids, these buyers actually would quite like price higher. They may be working for Soros. They may be the people with the t-shirts that want to be pushing that price up, that want to be pushing that demand up. So there's an opportunity there with, you can see here on the bid side, it's starting to get stacked up that there could be a play here for these people on the bid side to push price up, therefore driving the demand of this higher and giving them maybe the opportunity that they could sell at a higher price at a later stage. So what we get then is one of these people on the bid side, they remove themselves from the bid side and they just go in and market buy. Okay, so that market buy, they were there sat at $9, they wanted to buy at $9, they realized that that's not going to happen. There's just not the people willing to sell. So, okay, cool, I'm going to buy at $11, and that removes this guy from the market just here. Now, the remaining people on the bid side realize that, okay, we've gone from $9, there was a sale at $9, that's clearly not what the market wants anymore. All the demand here is at $11. That's fair price right now for this product. So what these people on the bid side have decided to do now is they've realized that the last traded price was at $11. So they decide to remove themselves from this $8 and $9 region, realizing that it's very unlikely that they are going to be able to buy at that price. And they decide to come in and to hold price here at 11. So you can see those people being removed from the 9 and the 8, and they are holding price here at $11. So that creates essentially what is a buy wall. Okay, and you can see then what happens here is a couple of other participants come in just underneath and they start to support price. So at this point, last traded price is at $11, and these the bid side is then holding the bid at $11 as well here, knowing that the closest sellers here are at 12. Then this continues on. Okay, so you get one of these people on the bid side deciding then to go in and to buy at market, removing this seller here on the ask side. Again, another sale that has gone through at $12 from someone that was sat here on the bid side, then deciding just to market buy and then taking out this seller just here. You have another person again, I think, that comes in at market, again taking out another seller, and then another person coming in at market taking out another seller. That then means that basically that $12 region is cleared, and that the next price up is going to be at 13. So then this exchange just kind of continues. Okay, so if you were to get any more buyers buying at market, they would have to be buying into the ask at $13 here. If you were to have any sellers at market, they would be selling into the bid at $11. And then of course that spread can get filled here by basically limit orders coming into the market. So I'm not going to do any more on this diagram. I hope that was clear. I've probably missed a few different things that the market can do. And I'm hoping that I've got everything right. It was really hard just to make the diagrams and to follow exactly what I was and to try and create it into some kind of story. But yeah, hopefully that gives you an idea of the mechanics of the market and some various things that you can see when you start to look into the DOM. And yeah, just to give you a perspective of price action by looking at a depth of market rather than just looking at candlesticks themselves. Okay, so you can see that you're really looking into the heartbeat of the market here and being able to understand exactly what is going on as just a very fast-paced auction at the end of the day. So yeah, we're going to move back over on to Exo charts. So I will just pull Exo charts back up. And yeah, this is what you can now see in front of you. So what we do have is a live DOM on the left hand side, accompanied by a Bitcoin chart on the 1 minute time frame here on the right. Now I put this down onto 1 tick. I'll move the Bitcoin chart down to 1 tick as well, just so you can really see what's going on. It's going to be very zoomed in, but we are talking about Bitcoin here. It is something that does move by very large numbers at like basically all times, but you're looking at this as 50-cent increments here on the price. And what you can see is, yeah, you're getting a lot of slippage on here. You're getting a lot of movement as we get these big orders coming in, and you can see on the books how it's just how spaced out a lot of the time all of these orders are. So relatively speaking, it's not the best idea to be looking at just at 1 tick. I tend to like something around the 10 tick, which is $5 increments, or 20 tick, which is $10 increments. That seems to work quite nicely for me, and it just allows a nice view on the market. But for this example, we are just going to keep things as they are here, and we're going to try and just explain some of what is going on right now. So I am just going to reset this, and what we can see right now is we do have on the bid, we do have almost $1 million of contracts there on as basically a buy wall, and then we have, well, it's hovering around that 200k mark on the ask side. Again, you can see again price moving constantly, so very hard to explain this in real time. I should probably have just taken a picture and explained it. But you can see basically price is not going to move unless you either get enough contracts to fill the entire positions that are either on the ask side. So either you're lifting the ask and you're getting enough contracts there. So say you have a $500,000 asks, so limit sell orders sat there, you'll need a $500,000 market buy, or cumulatively enough $500,000 worth of contracts bought at market in order to move price up to the next price point. Or you will need, again, on the inverse of that, in order to basically move price down, say you have $500,000 of market limit buy orders there, you're going to need $500,000 cumulatively of market sells hitting into the bid in order to move price down. So this just shows you some of this happening in real time. It is very fast paced. What you often get with Bitcoin is these big orders that do create huge slippage. Okay, so you can see basically here on the left hand side, these are your market sells coming in that are hitting into the bid, and on the right hand side you have your market buys that are lifting the offer here. And yeah, you do, all of these zeros basically are regions that have created slippage. So you can see like a 2.9k market buy at that price. Now that could have been that you've got 45k down here. This could have been a market buy of like 50k that took all of this price to actually fill it. So it is very typical of Bitcoin. You do get a lot of slippage all over the place, but generally speaking, if you do kind of turn this tick size back up to something a bit more reasonable, then it does become much easier to follow. We'll wait for this to go back, and you can see here it starts to just slow down and make a little bit more sense. It's starting to bunch a bit more price action together, and that's really where you can follow it. No one's really that interested in trading 50-cent increments on Bitcoin when you're talking about it being like at $39,000-$40,000 right now. So yeah, what we're going to do now is we're just going to have a little look at the settings on the DOM. So we're in the second part of the video. We're going to look at the settings on the DOM and just start to talk about the other options that are available here. So right now we do have it as a very simple bid, sell, buy, and ask with the price here. But there are other things that are available here as well, and we'll go into the details of what exactly they are as we get through them. So the main settings here, you'll see show DOM, you've got the row height, you've got all of this kind of thing. I'm not going to go into that kind of thing, but you can see the font size, you're able to change that and customize that layout. But then we're just going to go through each of these main columns. So you have price, show price column. That's very self-explanatory. Okay, price is there. It is there on the right hand side. And again, you can choose your font and you can choose the source for this. You then have your bid ask depth. So the bid ask depth, as you can see, it appearing and disappearing on the side, is what we've just been talking about. That is your bid on the left and your ask on the right in that blue and your red. Okay, and you can change some of the settings here to show text, to show the bars, to show the total, or yeah, invert it, things like that. Okay, so that is your bid ask depth. Your pool and stack, now that is actually what we'll do. Just before we get to that, we'll just go to buy and sell trades, because that very simply is what is the other thing that is in the middle. So you have your sells, you have your buys, and then again you can just choose to toggle this on or off, so text, do all of that kind of thing. So yeah, your pool and stack, these are additional columns that you can add. What I'm going to do now is I'm just going to expand this view out so you can really clearly see everything that's going on. So essentially what the pool stack is showing you is the change in liquidity at a particular price. Okay, so what you are doing is it's the net addition or subtraction from what is resting in the order book at that particular price. Now I'm just going to explain that over here quickly on PowerPoint again, because it is a little bit confusing. So I'm just going to pull this back up, and let's just say, okay, so you have here your stack, the bids, sells, buys, asks, and then again the stack. So this is the bid stack column. It's both labeled as stack on Exo, and you can see here on the order book you have 100 contracts at $10. You have 200 contracts waiting to be sold at $11. You have 100 contracts waiting to be bought at $9, and 150 contracts waiting to be bought at $8. So what you will have on the stack here is, say you have someone decides that, okay, now I'm not wanting to sell here anymore at $10. So I am going to remove 50 from the offer. So that would then show as negative 50 on the stack. So you are pulling 50 from that. And then, of course, the ask would then come down to 50. If someone was deciding to stack 50 on top of the ask, and they wanted to, so someone else steps in and they're like, cool, I want to sell 50 contracts at $10 as well. Then, of course, that ask side would then move to 150 on the same as on the bid side. If someone comes along and they're like, right, I want to go and I want to buy 300 contracts on the bid. So they add to the bid, add 300 contracts to the bid. If your stack is 300, then that would obviously move to 400. And inversely, if this would then go down to, say, negative 75 or whatever, then of course that would have then changed to, there you go, you had the number already, to 25 there if it was starting at 100. Okay, so that is in very simple terms what the bid and stack is. You're obviously going to get that movement as well from buyers and sellers, but this is just what is going on within the passive participants. This is the liquidity that they are adding or taking away from the market. They are either stacking by adding more orders either on the offer, the ask, or on the bid, or they are pulling their bids or their asks, and that is what results in what you saw on the chart a minute ago. So I will just put that back on, and there you go here. So you can see here 1.1 million, and you can see how it starts there. So it starts obviously at 0, because as price comes into that point, it will be at 0 because that's just been filled. And then it's what has happened since price has been there. So since price has been at this 39,377.5, you can see that we have the ask has reduced by $340,000. And what that represents is that if you are finding that the ask side or the bid side is you're finding people are pulling orders from that, it shows that there is maybe a lack of interest in supporting that move. So let's say that on the bid side you have $1 million there as price hits into that point, and then immediately you get on the stack or the stack and pull, you get negative 500,000 contracts coming from that. So that is basically saying that they're removing that, they're pulling the bids out, so it's less likely, it's less support there, and it's less likely to, you can see that as being kind of more likely the price is going to flow through that because people are removing their bids from the market, which will make it much easier for price to flow through it. On the inverse, if you have on the bid side, if you are wanting to create really strong support at a certain level, price comes into it, you hit kind of 1 million on the bid, and then immediately you're getting 1 million, 2 million, 3 million, 4 million stacking on top of that. You're creating these big buy walls. That is going to be much more difficult for price to break through. It would indicate strength in the market and therefore more likely that you are going to see price moving up. Difficult thing to explain. So again, I hope you all followed on that one, but that is pulling and stacking, the next little kind of section that you have here on Exo. Beneath that, you do have your, we've done buy sell trades already. Then you have your bid ask profile. So this isn't something I need to go over too much in this video. I have covered it in previous videos already, but basically it is what you would get on a footprint chart on your standard candlestick footprint charts on Exo. You are seeing the total number of market buys and market sells at each particular price, just as you would if we were to basically take this along, and there you have a bid ask on the chart just here. Or well, this is an imbalance, but you get the idea. It's a similar kind of thing. Beyond that, you have your period profile. Now this is dependent on, I will just show it on the chart over here. And again, this is the cumulative buy and sell at each price again. So what you're seeing here is your volume profile for the time period that you have chosen, and that you can choose from up at the top here. So we're currently looking at a daily profile. So this is all the volume that we have had so far on today's candle. However, you can change this if you would like. You can go down to a 5-minute time frame, and you can just be looking very simply at all of the price action. So this will reset every 5 minutes, and it will show you the point of control. It'll show you the VWAP and everything for that period of time. So it's a really useful little addition. It adds nice little markers onto your chart. And but I, as standard, would keep this as 1 day. It's nice to have a daily profile on here where you can see where your session VWAP is at. You can see where your daily point of control is at, and all of those kind of things. Again, the settings on here for the profile. You can choose to invert it. You have all of these like little bits here where you can show where the VWAP is. Again, if I find it, then this will just be kind of the label on and off for the VWAP. Again, the same with the point of control, the same with the value area high and the value area low. And you can see the percentages here from best bid and ask. So nice little examples here of where you can see where imbalances are on the chart and how far away you are from price itself. So you can see that at this point, as you're coming into this value area high, you're just above 0.08% above the current price. After that, you have your column order and size, and that is just very simply choosing how wide you want each of these columns to be. So again, as this example, we have made this very wide, so it's very easy to see everything. You can quickly just turn everything on and off here, so without having to go into each little setting, you can turn everything on and off. You can change the size of things, so you can make the pull stack really small if you wanted to. That's very, very small. There's 100. So if it's a little bit easier and you want to have maybe the same colors, but you just want to have that pull and stack as a smaller little section to the side, then that's quite a nice little addition you can do. Generally for myself, I keep everything apart from the bid ask profile on the chart and on my DOM. And yeah, finally you have your filters here. So you can hide certain trades. You can choose not to show trades below a certain amount on the chart here as well. So once you've got your DOM set up how you would like it, you can click onto the right hand side here and you will see tape settings. So tape is going to show you every single trade that has taken place. So every market trade that has taken place on that particular asset. So if we do just click here and go show tape, again, I've made the text and everything a little bit bigger, and I've got everything in there for the time being. What you have here is these 4 columns, okay? So you've got the time in which the trade was executed. You've got the price that that trade was executed at. You've got the size. So this is showing you how much, if it's in red on the left-hand side, that is a market sell order, and if it's in blue on the right hand side, that is a market buy order. So of course these red ones selling into the bid and these blue ones buying into the ask. And then what you have as this final column here is your net long and net short calculation. So this is telling you, if you go back onto previous videos and I explain how you can find what the net longs and net shorts are doing on a particular asset. And this is just showing you how this is calculated as time is going on. So you can see it's not calculating every single trade, but it takes the cumulative effect of all of these orders coming in, and this is the change that it's giving to your net longs and net shorts. So you can see with these sells that have just come through, you've had a reduction in net shorts and a reduction in net longs after this. So it's just constantly calculating. There's a slight lag in there, which is why it doesn't always correspond exactly to the trades coming in. But that's just what it's doing on the chart. So generally for myself, what I have on here is you can have it as big numbers, small numbers. So I always have it as show short numbers. I will not have the time on here. Like, you're getting so many trades on Bitcoin that it's not that relevant. So I just want to see the price and I want to see the size that's been traded. So I want to see the price here. I want to see the volume, which is this one right here. And more often than not, it's not very useful for myself, at least, to know the net longs and the net shorts. But there are different options that you can have on there. So when you do show this, you can choose whether it shows the volume or not, or whether it's just showing a calculation. You can left align, and yeah, so you probably want to have that left align because you can see how this is going a little bit weird here. So if you do find that things start to become a little bit off center and they're going into other columns, then just make sure you've got these alignments correct on the chart itself. So I'll take that off, and there you have it, is how I would have my DOM. Now, obviously, this is taking up a lot of the page. I have done this just so it is clear and easy to see for everybody. In fact, I can make that text even bigger and it still becomes quite clear. So if we do, where were we? We're probably about 40. There we go. It's all lining up quite nicely now. And I think on here, let's just make these 100, 100, 100. And there, that is the DOM. And now switching back to a standard view on XOcharts, we can start to just see this in action, and I can go through a couple of other little hints on here that will help you just to use this with your trading. Okay, so as standard, one very important thing to mention, and this is just personal preference for myself, is when you do set up the DOM on XOcharts, as I think pretty much as default, I think this goes on to 3, your auto center padding. So if you go to your settings up here on the top right, and you have your auto center padding as kind of general, you can see here how we have this center line, this yellow line that we actually started price action on, but you can see now that price is moving away from that. And what this can often give you is you can see price as, like, you have a lot more kind of buyers coming in, the sellers, you will see this price start to shoot up, and then if you get a lot more sellers coming in, you'll start to see this price start to shoot down, or where the DOM is. But for myself, I like to have things in the center at all times. I will always be using a footprint chart like this on the right hand side, so I don't really need to see the direction that the DOM is moving. I just want to be able to see the orders, and I want to be seeing an equal amount of orders on both the bid side and the ask side. So this auto center padding just basically means that price itself will not go beyond, on this occasion, 3 rows from the edge. So it could come all the way up here, and then it would start to just even itself out and basically hold up here as long as you're getting buying there. But I just, as normal, will just whack that all the way up to 50 or something, say, just so that it's forcing it into the center. So you can see here, no matter what price is doing, the actual bid and ask, the actual DOM that you are seeing, is forced into the center here. So that for me is just a nice little extra tip, just to be able to keep this nice and clean, keep things moving. And yeah, you've got the chart on the right hand side here that clearly shows you the direction. So for me, I just want to see in the center there what is going on the actual bid ask, what is going on the order book itself. and it just forces it all into the center. The other thing on here is you do have your auto center button, and if this does shoot off, sometimes it might do, if you do get like a really big order coming through, it can throw things off and it might not, or like basically pad it back into the middle there. So you can just click this little C here, which if things do get thrown off, again, if I can make this just 1, for example, and just let this drift off out the way a little bit, if we do get some orders, you can see that's drifted up a little bit. If you do click on center there, it will just shift it back into the middle. But yeah, the auto center is this padding that you see on here. The other thing is you can clear all at any time. So if you do want to just reset and take like away all of the orders that have happened within basically since you've been watching, you can just click this all button and that just removes it, and you then starting from scratch here. You have the tick size, okay, again, so there's your tick size. You have your candle type, which is the profile and the bid ask, and then you have your light mode, your dark mode, and everything there. So yeah, that's just a couple of other little pointers on here, and let's just watch this in action for a moment. Okay, so we can watch what is going on the price, and I can just explain a couple of other little bits that you might find useful. So this is a very standard setup. I'm using a 1-minute time frame here on the with an imbalance. I'm looking at just the delta cluster on the actual candlesticks that are coming through on the chart. What we have down the bottom is trade size. So this is the quantity of trades coming in to the market, the quantity of market orders coming in on both both sellers and buyers. So sellers in the red and buyers in the green there. And some other things that I do often add on to here, you can see this profile here on the right hand side. Now this is just a visual representation of this. So if we do just scroll into that a little bit more, basically this whole bid and ask is just represented as a very simple volume profile, a kind of a dynamic DOM on the right hand side here. So you can see not only all of the numbers and all of the information there, but you can just get a very quick view of who is dominant in the market. So you can see right now it being fairly balanced, but sometimes you'll see this blue side, this bid side, massively outweighing the ask side or the offer, and that can give you an indication that any sellers coming into the market are being absorbed, and the price is likely to move up as a result of that. Other useful things that you can throw on here, the trade size is often quite useful as well. So if you want to just filter out your tape and just start to look at where the big orders are coming in, you can throw your trade size on there. You also have on here your net longs and your net shorts, which again, you could remember how I was saying that these can be calculated. So this is showing you the change in your net longs and your net shorts, and then you have your open interest and delta. Again, this is all explained in another video, but it's just as you are basically having your DOM here on the left hand side, these are some of the useful things that I use very regularly in order to like trade. So why is the DOM so useful in comparison to just say being purely a technical trader and using a candlestick chart? Okay, so as a technical trader, and myself, I am a technical trader, I like to use technical analysis. I like to use things like channels. I like to use Fibonacci's. I like to use high time frame levels. I like to do all of those kind of things as well. But using the order flow, by looking at order flow and by looking at the DOM, it really gives you another perspective of the market. So whereas for a technical trader, you're just simply looking at levels and, okay, this gives me a basis to think that, okay, if price comes into the golden pocket, the 618 level, you are likely to see a reaction at that point. But what the DOM can tell you is it will tell you exactly what has happened in the market. So where volume has previously been traded and where price is very likely to find support or resistance as price moves up into that region. So let's say, for example, price starts to move up very kind of dramatically here, and suddenly you come into this like 1 million ask on here. It's quite unlikely, and I mean, this isn't a very good example, but let's say you had a 10 million ask at this point and it was really kind of just sticking out there, a very clear sell wall being put up. You know, by seeing that if price is going to come up into this region, it's very unlikely to move beyond that unless there is real significant volume that comes into the market on the market side, on the market orders, or unless that 10 million limit sell order gets pulled from the market. So without using any technical analysis, when you do come into these areas of the chart where you do see these big kind of orders just waiting to be filled, it can really help you to understand that where you are likely to see some support and resistance in real time without relying on any technical analysis. The other good thing about this is because it is so fast paced, there's always something you can trade on. You can see constantly that this bid ask profile and the DOM is constantly moving. So you can see right now it's a little bit more stacked to the bid side. Okay, you can see more people here wanting to buy than there are wanting to sell. And again, what you can see on the pull and stack is you can see how the closest price to it, and this is just a good example very locally, what we have is you have stacking on the bid side and pulling on the ask, which means people are removing their offers, they are removing their asks, and there are other traders, or maybe the same traders, putting that stacking it onto the bid side, which then has seen this little bit of a movement in price. Now that is, they're very small margins, and that's just one quick example of it. Again, it does change very quickly, so you can see straight away the stacking has gone onto the ask side, and you are now getting a bit more pulling on the bids, which has then led to a slight move down. But when you see this over the more volatile moves, the bigger moves, it starts to really give you a good indication of like when price is going to actually flip, when you see that change of behavior in the market. So if price is coming down really, really fast and it comes into a lot of bids at the low, and you see that the DOM starts to become heavily stacked onto the bid side, then you know that it's likely that you're going to see some absorption at that point, and that you can start to have a better, you can form a better bias that price is going to move in the opposite direction. The other useful thing about this, again, because it is so fast paced, you can take much quicker trades off of it. So if you're on an exchange, you wouldn't want to be doing this on an exchange necessarily where you've got really high fees, and you're just working with a very small spread or very kind of small percentages here. But you can take some, if you've just come out of a volatile time in the market, or even just trading as standard, what you can really easily do on the bid, on the by using the DOM, is you can find the price in which you're likely to get filled. You can put some limit orders there, knowing that, okay, if I can come into this region, if I want to make a sell, there's not too much going on there, I'm likely to get filled, and I want to be able to push price lower by getting filled at that point. So it can help you to get some limit orders in by knowing exactly where strategically you can place your orders, and also just by knowing basically when to get in and out. So if you do kind of, you've just got in and a few seconds later or a minute or so later, you find yourself coming into an area where if you're short, you have an area of support here where there's a lot of bids, that can just give you an idea of where is a good place to take profit. Once again, what you can then do is just place a limit order just above where you see any big buy walls or something, and that will be much more likely to get filled than if, say, you were waiting for a purely technical level based off of a Fibonacci or a high time frame level or something like that. So it does give a really good additional layer of information that you will not get just from standard technical trading. The other thing that I really like about the DOM is it shows you at all times just where your levels are and where you are in relation to the levels. So of course you can have marker settings on here, which shows you your daily value area high, you have your daily high over here. But if you are losing track of where things exactly are going and you've just got this, you can see here how far price is moving away from your entry. So quite a nice thing for myself with scalping, I like to be able to get the minimum of 0.5% move. So I would be looking for, if I have entered here, I'd be ideally looking for price to come up into this region where you have that 0.5. So this is a 0.26% away from price. We're at quite a low tick. So I'd be looking for price to move by basically that much. The other nice thing is on here is if we do go down, you can see where your session VWAP is. So again, if price comes down into this region, what you'll often find is orders stacking on the VWAP on either side here. So if price were to move down into where this session VWAP is, you would be very likely to see stacking on the VWAP as price is coming down into that. And if you were coming into the VWAP from below, you would likely see stacking on the ask side. And again, if you are seeing that, then it does give you more confidence to take a trade off of what is usually just more of a technical level. If you can actually see that the market is willing to trade at that price, willing to transact at that price, then it gives you more confidence in order to take that trade. The same with the point of control. Okay, it's very similar. You will often see, because that has had the most volume, this is the point which has had the most volume throughout this whole session, this whole day, it's very likely that if you do see price coming down into that, you'll see stacking on the bid side. That will give you confidence to be able to take a trade. And if you do not see stacking on the bid side as price comes down into it, then that again gives you more information where you can think, oh, I was wanting to trade this point of control, but we're getting some quite aggressive sell orders coming in and no one is willing to buy at this price anymore. So if you're not seeing anything there, and maybe as price is coming down into it, you maybe had 1, 2, 3 million worth of market of limit buy orders there, and you start to see them pulling. So you start to see 500k gets pulled, another 500k gets pulled, another 500k gets pulled, and you end up with the books thinning out below this point of control or at this point of control. It can then give you a reason, which is just as important as being able to take a trade. It can then give you a reason to not take that trade, because if you are seeing that aggression in the market, you're seeing people pulling their bids or inversely pulling their asks, then you might want to just stay out of that trade until you have a bit more information there, because it does mean that it's more likely that price can just trade through. You're not going to need as much volume to trade through if there is like 10 contracts waiting at the point of control, as you would need if, say, there were 10 million contracts there waiting at the point of control. So really good additional layer of information that you can get from the market that just helps to inform your trades. So, and another useful thing by using the DOM is you can start to see whether the market participants at limit are chasing the price in either direction, or whether price is just moving up there through an influx of market orders and you're left with very thin books below. So what I mean, for example, on that is, let's say we saw a very sudden move up in price over the next few minutes. If you were to see that we consistently get this price moving up and you consistently see stacking onto the bid side, you consistently see that every time you move up by 50 cents, by $5, the limit buys on the bids move their, or the buyers move their bids up as price is moving up. And you can see an example of it there. Okay, so price has just moved up a little bit and immediately you've got 1.5 million being stacked onto the bid side. So if you are seeing that, then it does help to support the thesis that that will be a strong move and that you're likely to get continuation on that move over a kind of prolonged period of time. And on the flip side, if you were to see basically a big influx of orders coming in, let's say we get a load of buys that just shoots price all the way up to this 39,790 level, but you don't see that the buyers are filling in that space below, so you don't get any stacking onto the bid side, then it does give you more confidence that, okay, maybe that's looking to be a move that you can fade. It is looking at like a final excess. You kind of completed an auction at that point. The books are very thin below. All of the buyers are now in and they are not really willing to continue to force price higher, or they're not willing to continue to chase price higher, that could give you a good reason in which to fade a move. So if you're looking for a swing failure pattern, a kind of a completed auction type of thing where you get liquidations being hit, where you get stop losses being hit, that's the kind of thing you would look to fade in the other direction, knowing that books are thin below. There's a big void of liquidity below, there's a big imbalance below, and therefore you can look for that to trade back down. Now, with everything in trading, it's not an exact science, it's all a gray area. So although something can look like, right now it can look as if the ask side here is a little bit more dominant than the bids, but that can change very, very quickly. It can change in an instant, and it doesn't always mean that it's going to go in the direction that you think it's going to go in. What you could have is someone just comes in, fat fingers a 10 million buy, and it shoots through all of this on the ask side, and then suddenly that changes everything. So it is an additional layer of information and an additional layer of data that can help to inform your decisions, but it certainly isn't it's not perfect. No trading is perfect, and it does change all the time. So definitely try it out if you haven't already. It will take a bit of getting used to it. It took me some time to get used to using this and to really understand when, like, what kind of conditions it is that you really want to see. Like, for example, since making this video, you're not seeing any major imbalance on the bid or the ask. It's fairly even. Price is just chopping around here. it becomes a lot more clear if you're seeing these really impulsive moves that would actually be very hard for me to follow, because I'd be moving all around like this. But it's on those very impulsive moves, or after the impulsive moves, that you start to see some really nice scalp opportunities present themselves, where you can get in and out within sometimes a few seconds even. And it just gives you good triggers on the market in order to trade. So do try it out. Again, this template is available on our Discord, so if you would like to use the template, please do head over to tauruscrypto.com again, and you can use the templates that we have provided on there. We also have other templates available on this, and we do have other videos on exocharts that explain what the footprint charts are and all of those kind of things as well. But on that note, I am going to conclude this video. I will thank you all very much for watching. Once again, hit that like button, subscribe if you haven't done so before, and yeah, I'll see you on the next video. Cheers, bye.